And welcome back to our weekly segment with Patience with KV. KV, how are you doing today?
All right, guys. Good. Feeling good. Wednesday.
Very good. Very good. Very good. Really quick before we get into this segment, we got the Beige Book that just came out. I want to read a couple headlines that come from there. Fed's Beige Book, manufacturers in a few districts perceived upside risk to near-term inflation. On balance, contact suspended with that inflation would hold steady at a slow pace moving forward. The economic outlook among contacts was cautiously optimistic. Thanks for nothing there. Employment rose at a slight pace overall. Overall economic activity expanded slightly on balance since late February. John, we never take much from Beige Book, but what does Beige Book tell us? What's coming out?
Well, the Beige Book is basically saying what the talking feds are saying. It's conflicting, it's confusing, and it's like listening to one of the talking feds. They don't know what they're doing. They don't know what's going to happen. All they're doing is just moving the levers around so that we can get this inflation under control, which I don't think we're doing a very good job of. What it means is the talking feds are going to be looking at this Beige Book, going over all of this information, parsing it out, and bringing all this information to the next Fed meeting, which is always 2 weeks, right? 2 weeks after the Beige Book comes out. So I think a lot of traders and investors are reading through this information, thinking not just about what they're thinking about it, but okay, what are the talking feds going to be thinking about this? How are they going to respond to this? It's very, it's just a difficult thing to try and cipher through and to try and make any good trade opportunities. We're going to see those before we're going to be able to respond to anything that we're reading in the Beige Book. Yeah, that's to me, that's it. I mean, the economy expanded slightly in February. Things are, we're still in inflation.
Yes.
Just see now, 10 out of 12 Fed districts reported slight or modest growth.
I haven't paid attention to the Beige Book in a while. It doesn't.
No.
It doesn't. It doesn't do what.
Most important things. It kind of just gives you a 2-week warning, 2-week heads up that FOMC is approaching. And I think that's the most important thing we could take from this. All right, KV, let's get back into these markets. Since we spoke to you last Wednesday, we've seen a big uptick, maybe even a spike, some would say, maybe I'm understanding that, in geopolitical risk coming out of the Middle East. How do you navigate markets like this? It's a common question we've been asking our guests. How do you navigate markets like this when we are subject to a headline coming out and completely derailing a trade, reversing the markets at any moment's notice, even though your process could be good, your thoughts, your foundation, your logic can be very sound into getting these trades, and geopolitical headline can completely wipe out the trade? How do you navigate these type of markets?
Before we get into that, I just wanted to thank someone in the chat. Probably one of the best comments I've got in a while. Does this guy look 18? Since I got the comments for the haircut, this is the best one so far. So I wish I was 18 again.
Respect.
Yeah, back to the markets. 2 words, honestly, to that question: size down. That is the only way you can manage the risk in this environment, because volatility has shot through the roof. It's doesn't matter if it's the morning session, if it's the afternoon session, if it's slow markets, the volatility has shot through the roof. I mean, you're seeing volatility during, after hours be similar with how it used to be during when the market was open during New York session. That's how crazy it has been lately. So unless you size down, there's really no way you can, manage risk and be prepared for this market. And just adjust as well when it comes to the movements, right? So, maybe before you were happy with a 5-point, 10-point move in the NASDAQ, if you're scalping. I mean, obviously, if you're holding for hours and hours, that's not enough. But if you were scalping before, 5 to 10 points was enough for NASDAQ to, make a first trim or at least take some profits out. That's not the case anymore. If you're taking trims right now before 15 points, it's not enough, because your losses are going to be much wider as well. So just adjust, again, position sizing, and adjust as well your targets and stop losses, because the markets have widened out a little bit more So you got to adjust to it. I mean, right now, 5 points get hit in NASDAQ with a blink. You blink once, it's 5 point up. If you blink twice, you just got stopped. So unless you're, managing it that way, there's really no way, in my opinion, that you can actually make this work.
John, I see you nodding your head over there when he said about sizing down in these markets. You agree, I take it?
Oh, yeah. I mean, you think about it, what KV was, talking about, there's expanded risk. There's also expanded, profit potential. So,
Yep.
you can still put up a really good day when there's volatility with a small amount of contracts
100%.
or micros,
Micros, yeah.
Makes perfect sense to me. I mean, when there's volatility like during COVID,
yeah,
I slow down. I just become very demanding of good trade locations, looking for cheap trades only, and size down. You got to size down, because if you catch a good one, you can make a lot of money in one or two contracts, and even in micros, you can make a lot of money when there's big ranges.
And this volatility, 100%. Like micros, I've been recommending micros all week since last week, actually, to everyone who has, especially if you're on a 50K account, there is no reason for you to be trading on the minis, because one, it benefits you a lot more as well, because you can, take advantage of having multiple contracts and scale out, rather than just having one mini contract and be like, oh my God, do I sell now? Do I sell now? Do I hold? Right? You have multiple, now you can scale out. There's a question in the chat that, how do you lock yourself out when you're in profits? If you're on TopStepX, guys, the guys there have made it so easy. You can lock yourself manually, and you can also put a profit target that locks you out automatically as well. So, if you want to have a goal of $500 a day, put the goal there in the settings, it will lock you out automatically, which I think 70% of the people watching us should probably do, because a lot of them are giving back losses as the day progresses. So big feature. I'm not sure if the tech team might bring the numbers, but the way I see it, it has increased performance on a lot of the traders that I know. So definitely use it. Just, it's 2 seconds. Like, literally put the number that you want, lock yourself out. And unless you go and open another account, you will not be trading for the day.
Yeah. Good advice.
All right, John, we were talking here in the green room. We saw that big kind of a bounce, I guess, a V-shaped recovery here in equities, talking S&Ps, NASDAQ, and really saw a turnaround, boy, right around 11:45, high noon Central Time, if you will, 1 o'clock Eastern. Let's talk about that. Let's talk about these levels. I'm seeing here in the S&Ps, 50-50 with a low 50-47, but nice round number, 50-50 seemed to be the pivot there. What did you make of this? I know you're putting something in the chat there, so let's review that.
Yeah, I was putting in the chat that, as the market was continuing to push lower, I kind of felt like it was targeting this trend line off this megaphone that we had back in December.
Yep.
We broke out of the megaphone. The last time we tested back down to it, it was rejected. We've got 1, 2, 3, 4 points of contact, rejection below it once, and it came across, within about 10 points of where we found our reversal here today. And it was a pretty stiff reversal. Looking at this 30-minute chart, I would call that a V bottom, right?
Yeah.
There's that trend line. I was looking at it coming in at around 57 approximately. Where do we get down to? We got down to 50-47. So 10 points through it. Not exorbitant risk, especially considering the amount of volatility that we experienced on the way down. And one other thing, the folks that were here for group coaching saw this already, but this is a chart that I keep up just to kind of keep track of gaps, right?
Yeah.
Yep.
So this is regular trading hour session only. This is the 21st of February. This is the 22nd of February. We've got a big gap that was left. And when we talk about weakness in structure below or above price, this is what we're talking about. This gap down here was left, and it kind of, I call them eyesores, right? If there was going to be a smooth market, we're going to see, overlapping bars, overlapping bars, overlapping bars. Now, again, this is only regular trading hour session. So we get to see the regular trading hour ranges and the fact that this gap existed. Well, where did we come down to? Where does it close this gap? 50, 57, half. Basically, very close to where that trend line came in. And there we go, right there. So a little bit of confluence there, and look what happens. Boom. We get a nice V bottom here. I don't know. We don't know what's going to happen now. I mean, this thing could turn around and barrel back to the downside. If something happens, that might be the case. But, for right now on this 30-minute chart, we've got a nice little V bottom here. And we'll see how the rest of the day plays out. But I just wanted to point those out. And when, unrelated levels line up like that, those can be some of your biggest opportunities.
Yep, and there was even more confluence right there, Hogue. Like literally on that same zone, you also had the yearly view up on the S&P. So if you anchor the beginning of it was literally if I open, okay, so my screen is showing there. If I go on the daily here, you can see the blue line right there. That's the yearly view up, and that was literally, I think that was the bottom of the day, if I'm not mistaken. If I zoom in, that's the blue line right there, guys. So a lot of confluence on that day low there. Obviously, the markets were extended and all of that, but there was a lot more confluence that happened at that point. And, just playing view ups, honestly. Yearly view up to daily view up here. Very interesting move in the ES. Very interesting. Yeah.
Huh.
Let's see how it plays out now, though. But, I mean, that was very, very high probability setup. I mean, especially if you're someone that tries to catch, bounces or rejection plays. Very, very nice. Right now, we are rejecting that view up break, coming a little bit lower, which I think it's necessary after this uptrending move right there, which wasn't small whatsoever. I mean, we recovered almost half of the morning drop, almost.
Yeah, we did.
Right.
So it wasn't small. The pullback here definitely necessary. Yeah, Nasdaq as well pulling back. Let's see.
Hey, KV. I remember a couple patients with KV segments ago. You pulled up the sector indicators. We have tech and healthcare and financial, and how that moves and pushes and pulls S&Ps and such. Are you still using that? Are you still finding it to be effective?
Yeah, no, 100%. I mean, even right now with the bounce that we saw, we saw that.
Would you mind pulling that up and sharing?
Yep.
Thank you. I want everyone to see this again. John, you remember this from a couple of weeks ago.
I still got them. I've got them.
Still got them. Man, we are. Dude, Top Step TV, man. The value is so great. We're learning here. There it is. All right, KV, give us a quick. You got a lot of colors up there. The slopes of the charts are relatively the same, so there is some correlation there. But please explain what these colors are and how you use them to trade and make your trading decisions.
Yep. So on the one, we have the S&P 500. We have the tech sector here in red, healthcare in blue, and then financials on orange here. These are the big holdings of the S&P 500 if you think about the three top sectors. So a lot of people get things confused. Oh my God, the market is moving, something's going to move. It's the opposite, right? It's the stocks and it's the sectors that move the S&P 500, right? Because it's an ETF basically. So understanding what these other markets are doing kind of gives you a little bit of a opportunity to understand where the market could go. And we saw this happen right now with the bounce as well. When we had the bounce on the S&P, we had already seen the healthcare sector and the financials move a little bit earlier. So that's why the move, if you look at the move comparing the NASDAQ with the S&P, NASDAQ a little bit lagging, didn't even touch the view up while we saw the S&P touch view up. So it was a little bit more forward because of the strength that we had in these other sectors compared to the NASDAQ there, which was lagging a little bit. And they're still holding. I mean, just look at the pullbacks. We had the pullback here in financials, got bought up, small pullback. Compare that with the tech sector, much, much weaker. So if you're trying to catch some move to the upside right now, I'd rather you guys be on the S&P because it is showing a little bit more strength on these two other sectors compared to the NASDAQ, which it's alone right now and it's a little bit more flat. S&P getting bought up, and we have made, look, higher low on financials, higher low in healthcare, and same thing happened on the S&P, but NASDAQ, again, tech sector is lagging a little bit right now. What this shows us right now looking forward is if we actually do see a base forming on the NASDAQ, that kind of has a domino effect and makes the S&P go up much, much faster, because these two other sectors are already up there. Now we just need the tech sector that is lagging a little bit right now to see that buyer pressure. So if we're waiting, if you guys are trading the S&P 500, you just got to wait to what NASDAQ does in the next few minutes. If you see that buyer pressure come in, you can easily see that VWAP break on the S&P as well.
Good stuff. Yes.
How would you use this information in a future? You know, usually if the sectors are already moving in one direction, you've missed the best location.
Yes. So you are trying to look for divergences, right? Similar to what we're looking for right now. We are seeing a little bit of a divergence when it comes to the tech sector, where it is doing its own thing right now. We have healthcare and financials trying to hold up there. Buyers are there, but tech is not moving incongruent. If they were moving all the same, there's not much that this tells you, right? Because, you know, it's all one direction. But we are getting that divergence right now. So it all depends when NASDAQ breaks and also which way, right? Because right now it looks like a rectangle right there. Just up and down on zigzags. Which way that the NASDAQ breaks, we're going to see. If the NASDAQ breaks to the downside, guys, but these two other sectors are still holding, you might have a probability of the S&P just holding a range. It doesn't even drop depending on how aggressive the sell-off is. But the most high probability trade right now would be for buyers to come in here on the NASDAQ, for us to see a very nice follow through to the upside, since we already have the strength here. That would make like all the sectors move in one direction, and we get some nice movements to the upside. It's a lot of selling pressure today, so I'm not sure if that's going to happen, but that would be like a very nice clean move to the upside on the afternoon session here.
So any upside continuation kind of leans on the tech sector now.
Yes, 100%. That's all we're waiting for right now. Questions in the chat: how do you get this chart? If you have TradingView, guys, it is completely simple. I mean, just open the S&P 500, SPY, SPY on the ETF side, and then you have this little plus icon at the top left. You can guys see my screen, and then add the other sectors here as well. You have all the sectors listed here, but I just have the top big three because that's what's going to move the market the most. You can put a lot more there, but you know, real estate isn't going to do much. You know, utilities are not going to do much because they don't have a big percentage of the S&P 500 holdings. So you're just putting a bunch of lines for no reason. So XLK, that's technology. It's similar with the NASDAQ, XLV, healthcare, and XLF, financials. And you should be good to go.
Great stuff.
All right, KV, we always talk to you on a Wednesday, so we've had a couple of trading days under our belt coming into this segment, which we're very appreciative of. So thank you always for your time, being generous with it. How many trades? The title of this segment is Patience with KV. I don't know the answer to this. How many trades have you taken this week? I will say under 5 trades altogether up until today. How many trades?
Under 5 trades. Under 5 trades for sure. So I didn't take any trades on Monday, but then it was three trades yesterday, and I was asking I was asking the team as well. What do you guys think? Is this good or bad? And everyone was like, bad. And it's right, you know. And it wasn't one of my best days either. It was 2 out of 3, so 2 winners, 1 loser, but still.
I'll take that.
Not one of the best days where, you know, it's usually 1 trade, 2 trades maximum. So today, 0 trades in the morning. I missed the sell-off on the opening sell-off. So I was like, okay, I missed the sell-off. I'm just going to let it go. Didn't expect this crazy aggressive move today. So I just considered the move lost on my end and went by my day. Waited for this session with you guys. But yeah, just 3 trades yesterday so far.
Typically 3 trades for, as you see. And what do you think the average amount of trades per week? I know obviously it changes based on market state and what's happening all around this global stuff like that. But how many trades in a week would you say that, like we said, the title of this segment is Patience, spelled P-A-Y, because it pays to be patient. You are the example of that. That's why you come on first. How many trades in a week will you take, a successful trader like yourself? Would you guess?
5 to 10. 5 to 10. Not more. You don't need like I know people who literally take like 2 trades a week as well, you know. So it's patience. And again, there's even more people out there that are more patient than me. Like, for example, there's people who have their own personal accounts and swing trade, and maybe they just take one trade the whole month, but they held it for 2 weeks, right? So that requires even more patience. Personally, I like to sleep well at night, so I like my positions to be closed. But if you are the type of person that are like, okay, the volatility intraday stresses me out, I'm more of a person that wants to capture bigger trends that go on for days and weeks. That's what you need to do, right? Because this day trading and scalping is not for everyone. It's just not. You gotta find what I call your trading personality as well. I'm not sure if you guys did one of those, personality traits back when you were in corporate or during college or whatever. Like we did a lot.
Yeah, we did
when I was in corporate as well. And you found your personality trait. Same thing has to be with trading as well. You got to find what trading style fits you. Like there's a lot of good people here on Top Step TV as well with a lot of different strategies. Even here you might find, okay, that's what I like. Like that's how I want to be, right? You got to find what fits you. Just because you see someone making money on Top Step TV doesn't mean you can replicate the same thing, because you might get his whole system or her whole system, right? And then you try to implement it and you're panicking, you're selling early, you're double thinking your entries, so you miss the entries, and you're like, oh my God, what's happening? The system's working, it's just you're failing to execute because your emotions are not adapting to that system. And it's not possible. You can't force yourself to be someone who you're not. So try and find, okay, what works for you. Do you want to hold positions for 2 seconds or 2 hours or 2 days? Or, do you want to trade something as volatile as the NASDAQ? Or do you want to do something like, I'm not going to say gold, because gold this week and last week has been the same as NASDAQ. Okay?
Gold,
So I'm not going to say
what's going on in
right
gold?
now.
Talk to us about gold really quick. What's going on over there?
Let's say something like micros and NASDAQ, right? Trade that for less volatility. Gold is crazy. I don't trade gold as much as people do, but I was just looking at the volatility, I think yesterday or 2 days ago,
it's incredible.
And the volatility was the same as the NASDAQ. And what I mean by that is just how much you're risking per dollar per contract, right? The same amount. I was like, what the hell is going on? Huge swings on gold right now, affected by the geopolitical risks as well, but huge swings on gold. If gold was like, okay, this pretty little futures contract, it's not. It's the same beast as the NASDAQ right now. So that's what I mean. You gotta adjust, guys. If gold was good, gold is a beast right now. Gotta trade something like, I don't know, corn or sugar contracts, something like that.
Sure.
Maybe
there's no fun in that though, KV. No fun. We can be patient, but we still need to have fun. We still need to have fun with our patience. Yes,
what are you trading today? What are you trading today? Corn futures. Imagine.
We're actually talking about taking delivery on corn one of these days. Some bullshit, right, John? We're actually talking about taking delivery. Yeah. We don't know how we're going to do it, but we're trying to figure out how we're going to take delivery on an expiring corn contract. Stay tuned for that. Maybe this summer we'll actually do it.
They want to dump 5,000 bushels of corn in my backyard.
Let's do it. That would be hilarious. I'm sure the wife would just love that.
Oh, yeah. My dog.
Dog would go crazy. Dog would go crazy. All right, we did see a bit of a sell-off here. We're down about 40 cents in crude here. And this 5-minute candles I'm looking. Selling has begun there. Bit of a pop, catching a bit of a bid here in S&Ps and NASDAQ. Dow as well. And gold not doing a whole lot. Oil continues to sell off, down 40 cents, 45 cents. Last minute or so. I'll keep an eye on that. KV, I want to touch on something you said earlier. In these type of markets, did I hear you right when you said you're trying to expand or you increase your profit targets due to volatility in these markets?
Yes, you have to, right? Because I can't put a 10-point stop loss anymore. So because I can't do that, I gotta increase my profit targets. If not, my risk and return ratio is just going to be crushed. So you gotta adjust to that as much as possible. If you don't, your risk, like literally your risk and return. I'm not sure if we have a lot of people watching right now. If your risk and return has been hit, guys, this past week, right? So from last Wednesday to now, it is just because you haven't adjusted to the market volatility. So you're putting different stop losses because the moves are bigger, but then you're taking profits, on a similar way, which is not going to work. So your losses have increased, and then your profits have stayed the same. So it's not going to work out. And the volatility is just nuts. I mean, just look at this right now. We had a what there from 02 to like you had the 30-point move in like 2 1-minute candles, and then it just dumped 25 points again. So like how's the 10-point stop loss going to help you there? Like if I opened a long position right now, which I'm not because it's completely sideways, but let's say I open a position right now, it's at 14. My stop loss should be around this zone right here, right below these two bottoms, right? Where we bounced, because that's the demand zone. It's probably going to be even below this low here in the morning. So somewhere around here. What's that? That's going to be from 75 all the way to 14, 25, 15. What's that? 40 points.
60.
Right?
Man.
So
that's an adjustment, KV. That's a major adjustment for these traders. They're going to have to really start accepting that type of risk, right, John? I mean, you're typically taking 20, you're accepting 20 points. Now we're asking traders to adjust. We're not saying comfortably, but they're going to have to adjust to now accepting 60 points of risk.
Or that's a good adjustment.
Or there's two things you could do. Either you just don't open the position as well, right? You don't have, like, just because the market is open doesn't mean you have to trade, right? You can just understand and be comfortable with these market fluctuations. But either you don't open a position, either you size down so you're comfortable with that. Because, for example, let's say usually you open 6 contracts, and usually your risk is 10 points. Now, if the risk has moved to 20 points, you just half the number of contracts. So it's 3 contracts that you're using, because you just doubled the amount of the stop loss, and you're still losing the same amount of dollar on those contracts, right? So you're making that adjustment. Or the third thing you could do is try to get better entry points, because sometimes a wider stop loss also means that you're not entering at the right time. You've missed the entry point, so your stop loss is too wide. It's only one of those 3 things. There's literally nothing else in between. List those down. Ask yourself, okay, is it this? Is it this? Is it this? What do I do next to kind of make a trade happen here, or not? You know?
Yeah, I mean, you're doing what I was talking about earlier. Is you're kind of reverse engineering the trade. Where does this trade fail? Where do I have to put my stops? And if I want good trade location, I'm going to have to be patient, KV. Patient.
Yeah.
Right?
It's there's a comment on the chat from Jeff. I bet you couldn't make any money with 2 micros on a 50K account. With 2 micros, guys, on this market, you'll make any amount of money you want, honestly. Look at the moves. You're having 100-point moves, like up and down for days now. Like how? Like 2 contracts times 2, that's 40, times 100 points, that's $400. Why do you need more than $400 on a 50K combine, for example, right? Even $100, even $200. I mean, 2 micros, guys, and this volatility. I understand 2 micros on a different market is pretty low. I know. I've tried it. On this market, it is not. It's not 2 micros, and there's people who and look, Freddie, I only trade 2 micros on my personal. I average 200 to 300 a day. It's possible. It's possible. There's a lot of you guys have that idea in your mind that it's not, but with this market volatility, it is 100% possible. And I think the most success right now are the people who are trading micros as well, because they are able to hold the pullbacks, right? Because the volatility is not crazy. And it also helps with your psychology, because if you have the right plan, and if you open a size that you're not comfortable with in this market, you get stopped. And then next thing you know, the trade went in your direction. You're like, oh my God, what happened? Right? You just didn't adjust to the market volatility. You had the plan. The plan was great. Your system works. Like, don't blame the system, blame yourself. Right? So you gotta adjust it. It's not realistic right now if you're not adjusting.
I like that, KV. Always good stuff coming from KV and John. Here we are. Let's take a quick look at the markets. We are consolidating here in S&P, trading 50.75. NASDAQ, a little barcoding going on. It's trading right around 17,700, a couple ticks above that. Well, there is a little bit of a holding pattern. Keep in mind here, after the bell, we do have some couple Fed speakers. We got Mester speaking. We got Bowman speaking this evening. Markets will be open for Bowman. on the reopen, the Asia session, but nothing. The slate seems to be clear for the rest of the day. Dow chopped around sideways, about 50 points above that 38,000 level. A lot of stuff is just kind of stuck right now, which is okay. Consolidating, like Dolby always says, we can't be stuck in this range forever, and we most certainly won't as we kind of head into power hour in about 25 minutes. The fireworks may start going there. KV, I want to get your thoughts on what Powell said yesterday. He kind of conceded that inflation is much stickier, if you want to use that word, or is being much more stubborn than once anticipated about, 4 or 5 months ago. Where do you think the Fed's head is right now? And moving forward, it looks like we're pricing in 1.5 rate cuts. Maybe that trend is certainly to the downside. We started with 6. Now we were down to 2. Now we're down to 1.5. Thoughts on where the Fed is and Powell? Some of the Powell comments that came out from yesterday.
Why every time I'm here there has to be a Powell comment either on the day or the day?
It's not my fault, man. I didn't make the calendar, KV. I didn't make the calendar.
God, man. Come on. It's almost every week now. He somehow just happens to be on the calendar every week. Fed week, FOMC minutes, another conference. Oh my God, it's crazy. But I mean, not much. And I didn't expect him to say much either, just because the next Fed meeting is close, so it's probably waiting for that. Plus, it's before earnings season, which I mentioned last week as well, is going to be huge. And I don't know, the sell-off today, I might blame it on the earnings as well coming next week, because next week we start with the big tech companies. Okay, guys? So people might be, taking some profits before that. You never know how those earnings come out next week. And I said this last week as well. This kind of market direction right now will be determined a lot by these earnings, because that's where we actually see how the market is. Right? If these companies are actually performing, if not performing, that's where you'll actually look at the value and what's going on. And then people adjust with the market and then adjust their targets and adjust everything. So not much I can say about Powell yesterday, honestly. To me, it just looked like another day. The markets didn't even do much. I mean, they didn't even move as far as I remember yesterday. 1 p.m. and then 2 p.m. I think we just stayed in the full range. Yeah, we stayed in the full range yesterday in the afternoon. Nothing happened. So I'm with the market. The market was neutral. I'm neutral as well. Nothing for me to gain from Powell's conference yesterday, the Q&A.
You seem to be tired of our Fed chairman there, KV, and I don't blame you, because that does seem to dominate a lot of our conversations. John, you and I were talking about last time KV was out here. Believe it or not, KV, even after you get off of this, we still think about some of the things you say. We even act on some of the trade suggestions. You do, absolutely. We're not here just to you're not here just to speak. We actually listen. And John and I were talking about, you said something about earnings being much more important than inflation numbers, and that's why the big earnings companies coming out next week is something you're going to be hyper focused on. Please, I know you just kind of touched on it. Please explain, as to why you look at that as opposed to inflation, where the Fed keeps pointing to inflation. That's kind of how they're going to base their decisions off of. But you are more keen and hyper-focused on the earnings. What particular companies will you be really focused on next week? If you haven't taken a peek at the calendar, just what are your general thoughts on earnings versus inflation numbers?
Inflation is backwards looking, right? So you're except for, again, CPI. I'm talking about CPI. CPI is a little bit lagging. I think we mentioned that as well when it came out. It is a little bit lagging, so it's not showing us anything. Now, when we get CPI, no analyst from the investment banks is adjusting targets for any company, all right? Because there's no direct correlation. But when we start getting these reports, then you get dozens and dozens of earnings, target upgrades and target downgrades and so on. And that ultimately affects the market. Affects the market how? So back when I was working in sales and trading, basically what we did is earnings popped up during the night. We hopped on an equity sales call in the morning. They told us, what's being upgraded was being downgraded from, the bank that I was working on. And then our job as people on the sales floor was basically just to call clients, hedge funds, mutual funds, and pitch them on why they should either invest more here or, whatever the case might be, right? So that's how it starts, and then eventually it all leads down to the markets, right? Because again, the S&P 500, it's an ETF from 500 companies. It's not a made up name, right? It is an ETF from the 500 companies. Now, if more money starts to flow on the big holdings, obviously we're going to see an impact on the market as well. And it makes it a little bit more forward looking as well, because that money is not in the markets right now, or could be in other sectors, and they kind of start shuffling things around. At least that's the way I look at it. I saw it firsthand, so I just love earnings season, just because of the volatility that comes in. And I don't know how it's going to react with this volatility, because we already have volatility. I'm not sure how much we have to adjust next week and the week to come, which, correct me if I'm wrong, but I think it's the two biggest weeks that we have the most earnings being reported in one earnings week. So that's how I look at it.
Yeah, I appreciate that. All right, John, I'm taking a look at here the Dow chart, the 5-minute S&P chart as well. The 5-minute kind of looks like coming up to the upper end of this range, around 20 or 30, and the Dow, that is 38,092. Are there any plays? I know we're moving slowly here, but we're coming into power hour. Also, what do we pull that up? I also want to get a delta check from you as well, but I want you to take a look at this chart and see. Okay, we just kind of popped to the upside of this range. Maybe we're going to break out. How do we know that a breakout has been confirmed? Obviously, that's the $1 million question. But it does look like the Dow is trying to make a breakout right now.
Yeah, it's come all the way back to the opening range right now.
Opening range, thank you.
Yeah, and initially I think the opening range was left at the low of the session in the Dow, which is the opposite of the NASDAQ. The NASDAQ, the opening range, remains the dead-ass high of the day. Just perfectly in line with what KV was saying, that the tech sector is the weakest of all, and that's why the NASDAQ has been struggling more. If we take a look at the profile here in the Dow,
yes,
it's going to be it's a little bit of a long profile. I can squeeze this down a little bit here. Okay, so we took out yesterday's low. We took out the previous day's low. We've rejected down below there now. Do I think this thing is going to whip and head to the upside? I don't think so, but I've been wrong before. And if we do take out the high of the initial balance, I think it falls more into range bound than any big continuation to the upside. We're seeing positive delta 1,700 in the Dow right now.
Popping.
Yep, it's popping.
Yep. I mean, just looking at the sectors as well, guys, which we were talking earlier.
Yeah, let's do it.
Yep. XLF right now at day high, right? And that's, again, looking at the Dow as well, like XLF, big holding there. And look at where the bottom of the XLF was, right? It started much earlier. Healthcare as well, much earlier. And then now look at energy moving, and then you had the S&P just pop like crazy. We broke view up. We're breaking a lot of zones just because we're having this one directional movement now, right? And they were holding all along. Again, higher lows. It's not stopping. Look at the way the financials are moving there. So that's it in real time.
Yeah, it was.
The NASDAQ really held the range, found buyers, found the base, and held with this S&P push that we just got right now as well.
Yeah, S&P's just blew through VWAP. NASDAQ's still cruising for it.
It's almost like something happened.
I'm looking. But yes.
No news, honestly.
No news, no.
The volume is
like the volume. Nick T says sellers continue to fail to finish the job on trend day down. Yeah, there's something to that. Sellers get exhausted much quicker. Sellers always get exhausted much quicker than the buyers will, as we've talked about. There is infinite bid to these markets. There's a natural bid, I should say. There's not infinite bid. There's a natural bid to the equities markets, and we maybe see something like that. We are getting some reports here. Biden has talked. Biden is speaking. Guard.
Yeah, Biden doesn't move the market like Trump did back in the day.
He doesn't? I don't know. Yeah, I mean, I don't know what he's talking about. Maybe I don't know if he's talking about the Middle East or what have you, but Trump certainly did move the markets before that. Yeah, I'm not seeing much. We'll keep an eye out for that.
No, back in the day, like literally, I remember whenever Trump had a conference or had a tweet or something, everyone would be watching because the market reacted like crazy. All right, so I don't know, this push, unless Trump posted something on Twitter right now that we're not seeing, maybe that caused it. But yeah, I think
Could be.
it's technical, guys. It's technical. We found the
Could be.
base on the Nasdaq, and then we had already seen strength on the other sectors. So unless we get some delayed news here, George is saying Iran must have apologized. I don't know.
Come on. That's not funny, George. Come on. This serious stuff. It's not funny, George. Hey, real quick check.
Nick is saying tariff talks going well. He says the S&P rips 2% in power hour. That'd be good for our 401ks.
I'll take the pop. Yeah. Real quick, taking a look at some of the tilt here. We got 77% long bias in the YM, so hopefully they're capturing some of those profits. 72% long in the NQ. It's jumping around on me. 68% long in the ES. So on the whole, we are long. John, we did real quick. We got that before this pop happened. What was that Delta update we got? We're going to take another higher here, guys. What was that Delta update?
It was 18,000. It's now 26,000 in the S&Ps.
26,000?
26,000 positive Delta in the S&Ps now.
Holy moly! Wow, that jumped.
And the Nasdaq, get this, still negative 1,900.
Interesting.
Nasdaq is the lagger, big time.
Yeah, we've been seeing a lot of.
Interesting to see that today. Yeah.
Yep, 26,000, 27,000 now positive Delta in the S&Ps, right at the value high. We start taking out these single TPOs up there. This thing could rip to the upside. That would be just amazing.
Yeah. Will the S&Ps return? Uh-oh. What was that? Oh, snap. Oh, snap. KV, what'd you do?
Fire alert.
KV hit the trip. What's up, Eddie?
Fire alert, guys. Stay tuned.
Yes. It is time for Bell to Bell.
Thank you, Morgan.
We are so glad you stayed with us.
Thank you, Morgan.
That we will be sending you.
Thank you, Morgan.
Set next week.
Oh,
remember too.
Yes, sir.
At the same email.
Okay.
And name as you did before.
I will. There you go. Same email. Remember, keep the same email. Morgan is letting you know that if you got the 3, you're cool. If you have not, if you only made 2 out of the 3, which is okay. During the day, you're gonna have an opportunity. Actually, during the night, slow markets today at 8 p.m. Central Time. We're gonna give those that only got 2 out of 3 the option to get that third one. We want to make sure that you do have that option. So do that. That's for sure. And by the way, if you are eligible, you do get those 3 check-ins forms done today. Expect the code in your mailbox, in your inbox by Friday, end of the day. Now, that's going to be in your email inbox. It's not going to be under your pillow when you wake up. It's going to be in your email inbox. So there you have it. And you got 15 minutes here. Get her done. Back to you, Andre.
There we go. All right, they're looking for a link. They're pinned to the top of the chat.
Yeah,
stay patient, man. It's like piranhas in the water circling for that meat.
I got somebody banging on my front door already.
They're hungry.
The link. I can hear them from here.
That third form. But like Eddie said, if you did not get all 3 forms, we will have a mulligan, a breakfast ball. In slow markets. I will graciously be joining Coach Dakota in slow markets this evening, 8 p.m. Central. Be sure to tune in for that. If you did miss one of the forms, you'll be able to fill out that 4th form or that replacement form then. All right, so we did see that pop, fellas, and kind of see a reverse from it. We bounced right off VWAP in the NASDAQ. Nice little short there if you're able to tag that. S&P's kind of returned to VWAP. So when you see a breakout like that, KV, does that kind of lead you to believe that that was a technical, it's just a simple technical play there? Because just the way we reacted?
Personally, yes. I mean, again, there was no significant news that we got right now. So just by looking at what we were talking about earlier, right, looking at the sectors, we had strength on the Dow. We had strength on financials, healthcare. We just needed that buyer pressure to come in on the NASDAQ, which we did see. We came literally at the bottom of that kind of range we had there, and just buyers scooped it in. To me, it looks completely technical. So, and I mean, look, that's the VWAP retest. As soon as we tested the VWAP on the NASDAQ, look at the selling pressure that's coming in right now as well. So it needed. I mean, we've talked about VWAP a lot, but that's what basically VWAP does, guys. And a lot of people place orders at VWAP. When I mean people, it's big institutions, big institutional investors as well, placing orders around that VWAP line, and that's what it basically does. A lot of people probably waited all day for this VWAP retest because we didn't retest this on the Nasdaq since 9:48 New York time, so like 18 minutes after the open. It's the first time ever. So a lot of orders being executed here, hence the increased volume as well that just came in there.
Oh, nice call in that alt move. That was kind of building that base, found the buyers that you were talking about, and sure enough, we did. Boy, crude has come to a screeching halt. So my chart, I might be having the wrong charts up here. I'm not sure.
For all intents and purposes, it's closed.
All intents and purposes, closed. Yes, it is. Although after these after-hours trades, we've seen a lot of volatility there. Gold especially. We'll obviously keep an eye on that. Party has definitely been over in gold.
Andre, take a look at this.
Yeah, let's take a look.
This is crude oil 30-minute chart. Market tanks right through weekly kickoff low, $83. Twice went 10 ticks above it, and it's really been resistant to below that level. So, I mean, I don't think there's a trade here, but when it barrels through one of those levels and comes back to it, it offers the opportunity for an execution and good risk management. And if you risked 15, 20 ticks against that weekly kickoff level, you had a pretty decent opportunity for 40, 50 tick trade. Weekly kickoff.
Hey, touch those levels, guys. We keep saying, keep those levels. Find some real estate on your screen for those levels that we post. We're trying to gather more levels as we try to execute house account trades. But that's just not for house account trades. For real personal trades, whether you're in a combine practice account, XFA, live funded, we're all here to help each other trade. Make that money, get paid, and enjoy the coolest gig on the planet. That's what we're here to do. We're doing it family style because we're all here to see each other succeed.
Yes. Nothing makes us happier than to see traders succeeding.
Man. Seriously. All right, KV. So we got about 6 minutes left here. And Patience with KV are one of our favorite weekly segments. We do learn a lot. The chat loves it. Oh, weird. We dropped our viewer numbers dropped off after that last form release. Interesting.
Mm-hmm.
Yeah, it's funny how that works. KV, what are you looking for? What are you looking for going into the close here on Power Hour? We're about to trade Power Hour. What should I be looking for? I mean, you did call it. We're building that base, and the buyers did come in, and we're trying to push it up higher. And we did, but what am I looking for going into Power Hour?
Yep. Personally, can we see my chart? Can we bring my chart up, guys, if we can? Yep, awesome. So personally, what I'm looking for is going to be this demand zone that we have right now. If this demand zone, which I just drew on the chart right now, it does not hold.
What are the prices, KV?
720 all the way to 740, 20-point range there. If that does not hold, if I'm going to be biased, I think we'll retest the lows once again this afternoon. Especially since we didn't hold the VWAP area right there. And if you read guys a lot on the VWAP, it tends to do this, and it tends to do this just to get in, fill in those orders there, and that's it for the day. So again, if I'm being biased, I don't like to be biased, but since you guys asked the question, if I'm being biased, I think we see a bearish afternoon here if we can't hold 720 here.
Gotta put you on the spot, KV. It wouldn't be fun if we didn't put you on the spot around here. Well, thank you for joining us, John. All right, we're starting to see that. We are selling off right now, John. Yep, John.
Yeah.
I said you see some more room to the downside as well. I know that 50-50 level in the S&Ps was a level that we had. I don't know what it. See if we can break beneath 17,700.
That was off that megaphone. And the gap close. So, that was a weakness in structure that is a technical move, right? If KV is going to be right on this whole thing being technical, then that really lines up very well with a technical move. And the fact that he's got that yearly VWAP that came across there too. I mean, there's three confluences that occurred at the low in the S&Ps today. And, that's more indicative of technical than news-driven markets. So, I mean, if we can't hold that level, there's a lot of space down below, I think.
Yeah.
I mean, just look at it. We
just erased that entire move.
Yeah, it's
Yep.
nothing's holding, and this usually technical moves is literally what's happening right now. Because if there was a news event, and if it was like a proper news event, it's probably holding the gains, but the gains are not holding. Probably just algorithms selling off a view up there, which again they were expecting that point the whole day. We didn't retest that for hours and hours today. If we're just focusing on the technicals now, that's the way I see it.
We can take a look here at profile if it gets caught a little bit frozen for some reason. But the high we just put into the S&Ps up here, I'm having some issues here. But at high 50 to 97 on this bar here is dead even with daily value area high, traded right up to it and fell right off of it. We got to remember, I mean, everybody's so used to buying dips and having, big up days. The market's in a different state now.
100%, John.
It takes time to kind of wrap your head around that. I know, but
100%.
It is a different state.
I had to learn the hard way. I was content losing money to being long. And then you lose money being long enough and you're like, uh-oh, something changed. Something changed. Just like John said, the market state has changed. What that catalyst was, this was about 3-4 weeks ago. We were up in the 53 40s-ish in the S&Ps. And we not only do we roll over, we're starting to sell off now. Geopolitical stuff really got that cranking. Sticky inflation got that cranking as well. And now, like KV said, we're going to see what earnings has in store for us because earnings could turn this all around. If we get some healthy earnings, KV, we got more room to the upside.
I 100% believe so.
Oh, yeah. It's only a matter of time, Andre.
That's
These
true.
markets will recover. They will continue their grind to the upside. Just depends on how bad things are for how long.
Yes. For how bad for how long, but news events come, they go. Even as serious as they are in the Middle East, news comes and goes. That's just the fact of the matter. Earnings come every quarter. Gentlemen, we got about 30 seconds left here of patience, KV. KV, thank you so much. We really appreciate that. Bronson, I'm missing form number 1. Bronson, you got tuned to 8 p.m. Central on Top Step TV and the YouTube channel Slow Markets with Coach Dakota. You'll get that form, and we got your back. But you got to wait a little bit. You missed it, so now you got to wait. We still got you. We're good here. KV, thank you for joining us. John, always appreciative. Great session today, boys. KV, give us some words of wisdom on the way out here.
Wisdom, take the risk. If you win, you'll be happy. If you lose, you will be wise.
Wow. Wow. On that, drop the mic. We are out. See you guys in Power Hour.